Hi guys, so welcome to day 16 of this YouTube teaching. Right, if you're just joining us, do also go through the previous 15 classes, 15 individual classes. They're all in one playlist. Right, so let's go to the October 2023 mentorship and go through it. Right, and this class is free. The only thing I need you to do is to share with your friends. Right, we're not asking you to tell anyone to pay anything, just share, let them also learn. That is so. Just copy the link. I give you just 30 seconds. Just do that. Just copy this link and share. 3, 2, 1. All right. So just share the link with your friends. Invite them to come and learn for free. Nobody's charging you. And I wish you get something insightful in this teaching, right? So let's talk about something very important. And this is something that you really don't understand. And it's called liquidity rates, right? So you have to understand liquidity rates. Right. Stop runs, right? Some people call it stop runs, but I'm calling it liquidity rates. All right. So now we are concerned about liquidity rates, Turtlesoup, right? ST calls it Turtlesoup, right? It's a setup in which the market runs liquidity before reversing, right? So you have to understand liquidity rates. Now, this is one of the biggest secrets to being a smart money trader. If you want to really understand smart money concept, if you want to do well as a smart money trader, there's nothing else you are understanding apart from liquidity rates. If you can understand liquidity rates and how to take advantage of it, then your trading has been solved. Like your trading problem has been solved by close to 60% because all smart money concepts, everything we talk about in the smart money space is revolving around liquidity, liquidity, right? And I've done a video on liquidity. I talk about buy side liquidity and sell side liquidity, right? I told you guys how to identify liquidity, what liquidity looks like on the chart, where you can anticipate liquidity rates, and what happens when liquidity rates occur. Right? So I want to talk about liquidity rate because in the previous two classes where I talk about liquidity, I talk about the bullish, the buy side liquidity and the sell side liquidity. I talked about how to identify them, the previous daily high, previous monthly high, all the those form stuff, right? So now I want to talk about liquidity rates. We are not concerned about what happens when market rates liquidity, or you can call it stop run. What happens when the market total stops? How do you anticipate liquidity rates, and what do you do with that information? So typically, if a market is bullish, right? If the market wants to go bullish, typically you will see the market do this. The market will typically do what? Take out what? Will typically do what? Take out liquidity. Why is this stopping? Right? If the market wants to be bullish, typically you should see this happen. Market would usually do what? Run liquidity. This is what we are really concerned about, this liquidity rate. So we are really concerned about this liquidity rate. That is what will form the basis of smart money concept. This liquidity rate, right? This is what the market does when it wants to go higher. And this is what you should expect. This is what we call the high probability move. When the market takes liquidity, and I talk about this more on inducements and unappointed sponsors. Right? Watch the video on inducement. It's part of this 2023 YouTube mentorship for October, right? So you have to also watch that. Now, this will run on stops. It's what you refer to as what you call liquidity rate. And this is what happens all the time on your chart. And this is what you refer to as Turtlesoup. So the idea of Turtlesoup, right, is that the market will raid buy side liquidity before breaking bullish. You call this the Turtlesoup long. So you can just label that as TSL, Turtlesoup long. So this is the idea that the market will raid liquidity, right? Turtlesoup long. It will raid liquidity before doing what? Running higher. I also feel as Turtlesoup long. Right? The market usually raid liquidity. It will raid liquidity before doing what? Before running higher. Right? So also feel as Turtlesoup long. Right? So market will usually raid liquidity to the downside before running higher. Right? And if the market wants to go bearish, you should really expect market to do what? To raid liquidity to the upside for the what? Breaking down. Right? This is what the market usually does when it really wants to be bearish. So the market was raid liquidity to the upside for the what? This is a high probability setup. So the total soup idea is that the market should raid what? buy side liquidity, or sorry, sell side liquidity before they what? This is buy side, sorry. Market should read buy side liquidity before they were breaking down. Why this is sell side liquidity? Market should read what? This sell side liquidity before they what? Breaking bullish. All right. So this is because what TSL, right? It's total soup short. So total short means they're looking for what sells in that. All right. So now this is an idea. This is an inducement kind of trade, right? I talk about inducement. This is an inducement kind of trade setup, and the market usually does what takes out this liquidity before they want running lower. So this information can really help you a lot because when it comes to total soup, once the market raise liquidity, then you can look out for what confirmations to do what to take price higher. So if you're bullish on the higher time frame, the market should do what raise liquidity to the downside, right? It will raise liquidity. You can anticipate the market to break bullish and take out what the external was liquidity at the upside. So this is also reflected about total soup. Total soup simply means the market already sells liquidity and then breaking back bullish, already buys liquidity and then breaking back what bearish. So this is not regarded as a break of structure because you want to see the market break, already liquidity and probably two things. Markets could tap into maybe another block that is down here. There could be another block down here. There's another block down here. One imbalance down there. Market should, come to a point of interest below and then give you what your trade entry there. So you're either waiting for what? Either you're trading what the POI directly, or you're waiting for what a lower time frame break or structure. Either there are two ways to trade total soup. Either the market hit your POI directly and you just take a limit. You're taking your long immediately, or you wait for what a lower time frame break. Like, what do I mean? The market doing what? Doing something like this. As the market comes to this point, the market should do something like this, lower high, and then break structure to the upside. Right? Those the market what give this what change of character. So either you're waiting for what a change of character below what this liquidity rate, or let's not say not say below, after the liquidity rate. You're either waiting for the market to break structure back bullish, or you simply what take a limit and place it directly at the other block or the imbalance below what this liquidity. So these kind of setups are very high quality. They are very high probability. When the market takes a liquidity, number one, note that you must understand the trend of the market. Understand the trend. I can't overemphasize this. That you must first of all put into consideration the trend of the market. The market must be in the direction you are projecting. It's not that the market is very, like now. You see the market is very heavy bearish. The market is giving heavy bearish move now. It's very heavy bearish. All right. I don't mean that the market will be very heavy bearish, like you're seeing the market do lower high, lower low, lower high, very heavy. And then want to go and do what? Want to go and look for what? Sell below this, buy below this. That is wrong. You want to say market giving what? A bullish setup, and then it's not the raise what? Liquidity. So the market must be bullish. It must be looking like this. The market is looking high, low, high, low, high, liquidity rate, and then higher, and then higher. So this is what I'm talking about. The market is bullish overall. Then it gives what this liquidity rate, right? Maybe taps into what this other block, right? It taps into this other block that is below, and then it will take price higher. So that's what I'm talking about. You have to understand what the market is doing on the higher time frame. It must be bullish before you can consider what a liquidity rate, right? So you must not, you won't be trying to, you're not trying to sell buy a bearish market. So this is what I'm talking about: liquidity rate and then bet. So what I'm referring to something like that, right? So what I'm referring to, market has to give what that idea, right? You want to see this liquidity rate. It's not something like the market can now give what liquidity rate and deeper into the other block before they what running higher, right? So what I'm referring to, right? So you must understand this. You have to understand this, right? So we cannot put higher time frame POI. So can I put something like a higher time frame POI here? HTF POI. So you can put the header POI. So it's not compulsory there must be a POI. Either there's a POI or you wait for what a lower time frame confirmation. So market must not hit the POI before you can consider buy, right? But it's very high probability if there's a kind of POI there, a kind of other block there or POI, right? So that would be a higher time frame sponsored POI down there, right? Before you can look for what your total soup belongs, right? So let us go to the rate chart and try to understand this thing, right? Let's go to the rate charts. Let us see how these things pan out. Right, let's take out all this lipstick and then go to rate charts, right? So now this is the $80, right? Look at it. Now see what I'm talking about here. What can you see here? The market is bullish, right? Can see the market is breaking highs, right? Did we have a liquidity rate here? Yes. So this happened during the New York session, right? So New York session opened somewhere around there. We had what New York opened somewhere around there. Okay, New York opened somewhere around there, right? So now before this New York opened, all this is what we refer to as what London liquidity, right? So now the market give liquidity. The market was bullish. Remember, the market was bullish. Because the market was trading higher, and we had this liquidity up here to take, right? So the market did what? What happened there? We saw this low being swept. Right? Look at this low here. I see that this liquidity rate there. Look it was it saw liquidity and then what ran back bullish. And I actually called this trade. I actually called this buy. Right? If you go to a lower time frame, you actually see that there was actually was a kind of lower time frame break there. Let's go to the 1 minute chart. You see that there was actually a very sweet trade there. All right. I always wish I can get that. All right. So you can see very clearly that was a very sweet entry there. I actually called this trade. It was very, very beautiful. So you can see it was very nice entry there. So watch this. Very sweet trade. Right. I'm just giving guys an overall view. I'm not trying to go deep. So now the market broke above this high. I can see that there was actually a market structure shift. Market closed above this high, right? So the market actually closed above this high. That's what we refer to as a change of character. So I had this change of character here. I had change of character. So I just simply went long on the open of the candle. I just played this whole candle like this. So I just put my limit on that and I bought immediately. And the market broke above it, run higher. That was my trade. I actually called this buy on EU. Right. So you can see how this is pan out. So you can see that also the best one to affect our liquidity rate, right? So you have to understand the market's direction on the higher time frame, and then you can anticipate what those kind of setups, right? So watch this one as well. We saw the market induce liquidity here. We had this low form here, right? You can see this low, this short low form here. What happened? Market created liquidity. And market created liquidity. What did it hit? It hit was this breaker block. We had a breaker block inside there. So this breaker block was the hit. Right? We hit this breaker block properly. So this breaker block was the hit. Right? We hit this breaker block. We had this liquidity run into this breaker block. And there was also an imbalance inside there. So you can see market actually gave a nice liquidity rate there. And then what happened? It broke back bullish, right? So you saw what this break of structure the upside. What do we have here? That was a final confirmation here. So you can this was a confirmation here. Market broke back bullish. Right? After the liquidity rate, it broke back bullish. And then what happened? Market was broke and then came back to what our BY. So we had this other block here. You had this other block created by that break. So this other block was created there. So you can see this beautiful entry there. Nice entry. And that was it. So we had two beautiful buys based on the liquidity rate concept, right? Let's just look at another pair. Let's understand more of this. This happens a lot of repeats. So the best thing I would do for you, I would advise you to go to your chart and look for liquidity rates that led to what high probability trades. Right. Let's look at this. What trend was this market? How to understand the trend of the market first? What is the market trending up or down? Right. Okay. So let's look at this point here. Now what happened there? Market was trending lower. What can we say? That was that market structure shift here. So market broke was bearish somewhere around there. So that market structure shift here. Market broke structure here. Right. So what happened? We saw what this high. We saw what this liquidity rate. So we had liquidity rate here. This total soup short. You have to understand the trend in the market first. So we had what this liquidity rate. So what's this liquidity rate there? So we had the liquidity rate. Markets did what? So rated liquidity. I don't know why this mouse is just so slow, but it's fine. So I had this liquidity rate. Where the rate happened to came into this last order flow, right? So I had this order flow right here. So I've talked about order flow. So we rated liquidity and tap into this order flow. So if you wanted to take this trade directly, we have simply done was going short at this order flow, sell at this order flow, and then sometimes and pull the high. Right, that would be a very nice entry on this, and you can see the market really was tanked to the bottom. Right, you can see this happened on Friday during the absolute sessions. You can see the market open and then what tank to the ground. Right, you can see this is occur on repeat. So the market usually raise liquidity before going on the overall direction. Right, you can see this one as well. Market was bearish. So you can see this bearish break. Right, so watch this. So market was bearish. Did you have a liquidity rate there? Yes, we had it. So I had a liquidity rate. The first one was there, and then the second one. Let's use this recent one. How was the liquidity rate there? So if maybe you are looking at this, where was there a POI here? Yes. So I can see okay. All right. So I can see this. Okay, I was not really okay. This other flow. So you got this look at this other flow here. So I had this other flow. You watch the video. I want to talk about other flow. We hit this other flow here. So maybe if you play the lower time entry, you are getting your entry there. So That was it. Beautiful trade. Order flow tapped into. This order flow was not tapped into. You can see this was the last up move before this break. So this was an order flow. Watch my video order flow. I talked about order flow in one of the teachings. I think this 2023 bootcamp. Right? So watch the video order flow. I talk about all this. How to identify order flow. The last up push before it break down is an order flow. So market hit this order flow. What happened? We went forward. The sell side, right? So you can anticipate this to occur before the market goes the direction it wants to go, right? Can see this occur on repeat. So look at another one here. Market want to still go bearish. So had what? Another liquidity rate there. Market traded liquidity here. So had the liquidity rate there. Market traded liquidity and then I don't know where to type into there. So market traded liquidity, liquidated this high as well, and then finally what? Drop below. Right. So we have to always anticipate liquidity rates. Liquidity rates. It happens all the time. Look at another liquidity rate here. So watch this. So market take out the liquidity first. Then what? For breaking it down. So it happens a lot all the time on every single chart. Let's look at crypto. Remember, I'm not talking about entries. I'm not showing you guys how to identify liquidity rates, right? I'm not teaching you guys lower time entry. Just that we'll talk about that as we continue. I'm not teaching you guys liquidity rates, so how to anticipate liquidity rates, what it does in the chart, what of all these fun stuff, right? It's when it's in line with the trend. That's when we can anticipate what those big moves after the liquidity rate, right? So I don't really like this. I don't really like crypto. Let's just go to the high time frame and see if what crypto has been doing. Let's go at the 45 minutes time frame. So wow, look at examples of liquidity rate all over. I can see them here. I'm seeing them already. So look at this example here. Market was trading bearish, right? So how the market was going down. So what do we have here? That was our liquidity rate here. So how the liquidity market was traded this liquidity here, right? So it's either the market hits a PY or you wait for a what? A lower type confirmation, right? So how the liquidity rate there. So liquidity rate was taken, the liquidity rate there. Market rate liquidity rate was broke down. So that what happens. You have to anticipate liquidity rates before your overall direction. Right? So to first total soup. Look at another one here. This one was news. I think it was news. So what happened there? Very clear. It was on Wednesday. By 8 o'clock, is a news event. News actually come out on Wednesdays. So liquidity rate, right? Markets came here into this other flow. This was the last other flow I can find there. This was the last other flow. So watch this. Market hit its other flow, kind of passed through a bit, and then dropped. So you can see how this is occur. It happens a lot on the charts, right? So always anticipate liquidity rate to the overall direction you are anticipating, right? So I think I should end this video here so we can talk about more things in our next call, right? So I want you guys to backtest. Remember the setup for Turtlesoup. And the market is bullish. The market should do what? Should leverage liquidity to the downside for the what? Breaking was bullish, right? You should feel the market will do this before what? The breaking bullish. And if the market is bearish, doesn't matter what they want to read or the upside liquidity for the what? Breaking. Remember, don't forget this. What should be liquidity for the what? Breaking down, right? Remember that this, of course, this was what the liquidity rate or a total super there, right? So I hope you guys find value. So when markets the liquidity, if you use indicators, whatever you use, you can use it to a confirmation, right? Today is not entry confirmation. Also, teaching you guys how to how the market trades from a smart money perspective. Liquidity rate does not mean a break of structure. Understand the trend of the market. When market raise liquidity, look for what a high time POI or wait for what a lower time confirmation, and then what you go your overall direction, right? So I hope this was insightful. I wish you guys the best of your trading. See you guys tomorrow. Don't forget to share this video to your friends and like this video, share. I love you all. There's nothing you can do about it. Right. So have a wonderful day. Cheers and God bless.